That's what I'm going to basically do. I'm going to show both Apple and Tesla today. Steve said that he didn't really have a stock for us today. So I said, hey, well, let's go back and just look at this. There are a lot of people who are really excited about Tesla and Apple, and we'll just chat about that. Let's see, are we online yet? And come on. Excited about Tesla and Apple, and we'll just chat about that. Let's turn that off. There we go. And let's go back and turn on the other aspect of, there we go. Kick that over and start the, I got about a jillion little things here that I have to take care of to get everything up and operational. So, hey, everybody, this is Dennis Wilburn. I want to welcome everybody to today's session of how to make money trading stocks. This is our weekly live stream that we do from Active Trend Trading. Thank you for joining us. And let's get into it. There's a lot of exciting things happening in the market. I hope that you have, one, done a appropriate job of planning your trades out. And remember, no plan is complete if you do not have a stop loss, either if it's a trailing stop or a stop loss. No plan is complete unless you've got one of those in place, or at least have identified one. So let's go over. Just remember what we do is for trading purposes, and here's where we're sitting as of about 9 o'clock this morning. Active Trend Trading is up about 48%. The Dow went back into negative numbers. The Russell continues in negative numbers. The NASDAQ continues to be strong. However, we'll have to ask the question, how deep will the correction go? And so with that, we'll jump over into the charts here shortly. And compared to the S&P, the active trend trading system is up about 43% more than the S&P. So what are we looking at? What stocks this week? And also, I'm going to be taking now, Steve, did you come up with any other stocks? And so,
sorry, Dennis, I muted myself. I do not have any picks for today.
Well, then I think
Tesla does look pretty intriguing.
Yeah, we'll take a look at Tesla and Apple and just go kind of walk people through those. And so remember, our objective for the active trend trading is to provide top-notch market analysis every week, timely, actionable intel that clarifies, simplifies trading decisions, to multiply your profits, minimize your risk. This my market overview for the week, basically. I really thought that the market weakness would actually push out all the way until after Labor Day. But guess what? People are taking some profits off the table today. What's going on is basically institutional traders, the guys who basically trade the big bucks, they're heading for the beach. Or I guess they're heading for the beach. Maybe they're heading for their bunker to hunker down with the virus thing. I know in Hawaii, yeah, we can't go to the beach right now unless, well, we can go to the beach. We have to walk straight out to the water. And anyway, it's just really strange. But even though September is a weakness setting, weakness setting in, but trade the chart that's in front of you. And there will be opportunities, numerous opportunities throughout the month of September, where we get some really good setups that will hopefully propel us into the end of the year. I think this year, the end of this year is going to be very interesting with the election coming up and all the noise that's going on with that, the civil unrest, which could basically, that could be an earth shaker. I mean, it really could. I don't know about you guys, but I'm absolutely shocked at the level of stuff that's going on in on the mainland. And so we'll look at that from there. So again, hey, I will put a link down if you're on YouTube, I will put a link down to, if you're interested in a trading journal. This has become a very popular trading journal that was developed by my son. It's all about the active trend trading trading journal. It actually has the active trend trading system inside of it where you can review it, study it, figure out how it works. I know some of you have got that have utilized this before. And so I encourage you, take a look at it. It comes in two sizes, small and large. No, no, the notebook size, and which is this size, and then the 8.5 by 11. So anyway, I want to remind everybody that look at the sign behind me, and what I'm trying to say with the sign is be careful. We are in a danger zone from the aspect of the markets could reverse and just absolutely rip your face off. So maintain your protection. As you saw, the top 5 folks saw this past week. Yeah, I took some trades. I only took half positions on the majority of them. And we basically, got hit with a couple of stop losses today. But since it was so small and our stop losses were inside of 5%, the damage was controlled. The damage was controlled. So let's take a look at what's going on in the market. Let's take a look at S&P first. Daily chart on the left, correction on the right, weekly chart on the right. And I will show you, or on the left, excuse me. I want to show you basically what's going on. If we close where we are right now, we have the early stages of a potential pullback. How deep will the pullback go? We do not know. TSI crossing over to the downside. And we have the first weekly momentum shift to the downside also. That's the long-term momentum. So what we're seeing is basically some momentum shifting to the downside, not just on the indexes, but also individual stocks. And as you can see, I mean, stocks have been kind of getting ripped, growth stocks and all that kind of stuff. And that's okay. We were expecting part of that. And so we'll move on from there. What's going on with TSI, correction, the S&P, it is finding support here at this past congestion. And then there's also a level that I like down here. Where is this? This is down about, let's see, 323. So it's about, $16 away from where we currently are, where you could find some support. We also have some support here. And so those are levels where I would anticipate bounces. The positive side of today's candlestick, though, is price action sold off early in the day. Buyers came back in, where in between the 50-day moving average and the 34, push prices back up. Downside, staying below the 8 and the 20, which oftentimes is the lead for going into a more significant downturn. I highlighted this a little bit earlier, or I'll talk about it right now. I've added a 3 standard deviation away from the 20-day moving average line on my Keltner channels. Why? We are getting, basically the market has become a market of extremes. We pushed up above it. Typically, it won't stay above it for very long. And so you stayed up here for 6 days, then reversed. And when the price action reverses back down inside, it's either going to stop at one of several places. One, it'll stop at the 8. It'll stop at the 20, or it'll stop at down here. As you can see with spiders, it stopped towards the lower level. How else can we trade this? Basically, now that we've gotten I want to highlight this also, we have got an intraday lower low in place. That typically says, hey, we're going to go out to take on low, additional lows. And so I'm anticipating any kind of pullback back up into the 820 may provide an opportunity to basically take a downside position on the SPYs, but don't be over, moderate your expectations to expect to pull back into the 50, because the 50 is still looking like, hey, I want to run to the upside. Okay, let's take a real quick look at Qs. Qs the strongest, has been the strong. Whoops, no. Q. There we go. Similar type, painting a similar type picture. Came down again also, and this is the, although it doesn't look like much, this right here was a swing low in this little move down. So price action did take out that swing low on an intraday basis. And does that mean it's going to fall from the sky and just completely crash? No, not necessarily. But what I would like you to be aware of is just look for a convergence of clues. And right now, my convergence of clues is favoring more of a downside move. Why do I say that? Well, my market forecast, long-term momentum on a weekly chart, tick to the downside for the week. I have a bearish engulfing, just like I had on the S&P. However, it did hold up at this approximately 50-day moving average, and buyers came in there. Just look, if weakness continues, just look for a, any kind of a test up in this area might give you an opportunity to take a short, write it to the 50 or write it to the 34, and then if it breaks, look for a potential move down to here and or this level here. So that one level here is 250. The level down here is about 237. And the other thing you can do is, if you know how to use Fibonacci's, throw a fib on this. And I'll show you what I'm doing with that. You can throw a fib on a couple of different ways. One, I can go down here to from the ultimate low for the year, which is down here. Grab the low, come up here, grab the high. And then the ideal area on a normal, healthy pullback would be somewhere between the 382. And as you can see, the 382 is close to a former level of support. And so I would highlight that and say, hey, that could be very strong. The 50 period moving average, which again is in a high, a strong support zone. And then down here at the 618. The 618, if we break down all the way there, we would be breaking the 200-day moving average. But it also is at a level where it did a breakout before. So, you may want to jot down those numbers as you rewatch the video. So that's what I've got going on with the Qs. And IWM. IWM was kind of interesting this morning because IWM, while showing some weakness, was also holding up, never mind. No, no, it is actually it was holding up pretty well. This is a classic kind of move I want to show you just real quick if you're learning how to use the Keltners, is this move up here where IWM went ahead and pierced through the upper 3 standard deviation moving and three standard deviation Keltner channel, then does a pullback, comes back and tests towards that 2 standard deviation. If that test fails, that's oftentimes a sign or a clue that, hey, more downside is coming. That makes it a very nice place. And we had also another test of it right there. Anytime it tests back up into the 2 standard deviation Keltner channel after piercing the 3, that can oftentimes be a great setup for a move to the downside. So IWM, yeah, we're back here. We're testing the 50. We've taken out the low. We're back into a level of support. We're still above the 200 though. So how do we want to play this? We basically, as I said, it looks a little bit more bearish than the other entities. 4 weeks ago, we had a shooting star, followed by a bearish engulfing, followed by just a little spinning top, followed by another bearish, longer-term bearish engulfing. So with everything turning over to the downside, basically, we don't have to be in a hurry to get into stuff. We can wait for it to jot down here to some of these lower level of support, and the momentum is pointing down. So I want to look for at least 2 to 3 clues. And on the Keltner channels, if you don't know how to use them, I will be offering a with the Bay Area Moneymakers on the 12th of September. I'll be doing training on both the Keltner channel and the TSI. The admission is $15. It is sponsored by the Bay Area Moneymakers. So Steve, what do you got? I mean,
I don't have anything. I got completely shaken out of my positions yesterday.
okay.
I'm waiting for the market to get to firm or stop going down further.
Okay.
some idea of buyers that come back in, and I'll start reinitiating positions.
Okay, cool. And so you look at, so you're waiting for the same thing I am, basically, is to get the pullback out of the way.
Correct.
And oh, there was one other piece of I did some additional analysis earlier today to see where this might head. And what I'm showing timing wise is that we could get a potential bottom somewhere around October, somewhere between October 5th and October 10th.
Mhm.
It could, move up, prior to that, but that's what I'm looking at. Hey, let's roll over and really quick and take a look at, I promise you I'd take a look. And since Barbara asked, I will do Apple first. When do we want to buy Apple? Well, that's a great question. One, ask yourself, okay, here is the day. Let me show you. Apple made the announcement for the split, 4-for-1 split on this day right there. From that day forward to the high, just, you'll see it split where it split on the first, and then the high was made and a reverse of bearish engulfing. So from that high on the day of the announcement up to the total high was, as you can see, 29.85% move. Now, some people are long-term Apple holders, and that's great. And so you're in it for the long run, and you may have bought Apple back in 2005 or 2006. That's great. Manage. But if you got into Apple around this area here on the breakout or on the news, what are you going to do? How are you going to protect your profits? Okay, you had almost 30% in. Anybody who got into this at that time, did you put in a stop loss? If you did, what was your exit plan to get out of Apple? I know Lee Tanner from the Petaluma IBD group, I think he uses like a stop loss of something like 15%. If it drops 15% from the high, he's, and maybe in one day, I'm not really totally familiar with his Lee's rules, but basically if it drops 15% from the high, he basically jumps out of the trade. So how far did Apple fall? I don't know, we'll ask Newton. So Apple fell 19%. So if you were in it from the bottom or from here, you basically gave back 2/3 of your profit. Now, if I would have said, hey, I want to get out at 15%, you would have been stopped out today, and that's okay. But you would have gotten out with more of your profits. And so one of the things I've learned and seen in traders is that they get so, okay, you have to ask yourself a question. This move from here up to here, was that based on the value of Apple? Or was that based on emotions? What do you guys think? Value or emotions? Hey, gang. Yep, you got it, Barb. Eric, you're absolutely spot on. Emotions. And so if you can recognize, so you knew that, so if you can recognize that a move is based on emotions, well, don't step into the trap or the landmine and blow your legs off that saying, oh, well, this time it's going to be different. Yeah, I realize this is an emotional move, but it's going to keep going up. It's going to keep going up. Like I said, I got so many questions about how are you going to trade Apple? How are you going to trade it? Why aren't you in on Apple and all that kind of stuff? And Tesla. And I said, because I'm waiting for what? My post split depression that is underway right now. And so now back to Barbara's question, where do we want to buy Apple? One, I want my clues to line up. Barbara, I use the TSI. TSI on a daily chart has not turned back over. My momentum daily chart still heading down. My momentum weekly chart just turned over. My TSI just turned over also on the weekly chart. I have not quite a bearish engulfing pattern on the weekly, but I certainly do on the daily. And it's acting like, hey, I want to head down. Again, great stock. And so where might it go? I will grab right now. I would just grab this most recent move and just throw a fib on this from this low here. Back up to the high. Get up there high. There we go. And as you can see, what's going on with Apple is basically in the magic fib box. And so it may, it could be close to being able to, be in a buy spot. However, my other clues are just not coming into fruition yet. And so here's my magic fib box. So I'll tend to draw in here a lot of times. I'll just draw that in, expand it out to there. There's my magic fib box. I'm anticipating some kind of reversal. I almost have a hammer reversal today, but I'll wait. That is such a long tail. I'll wait for retesting down in that to see where it will, what it will do. So that's what I'm looking at Apple. Are we close? Potentially. The other thing is remember, Apple could go all the way down here to $100. $100, around $100. $100 is a very strong level of support. Just keep that in mind. Strong level of support. And so now you're just waiting. I mean, you are literally, waiting for the big fish to bite. So Tesla is our next opportunity. What's Tesla doing? Something very similar. Again, Tesla announced here this day. Where do we? Tesla announced, I think, here on the 11th or 12th or 13th. How far did Tesla run? Well, Tesla ran, again, it's good to know this. And once you've identified a run as an emotional run, it gives you a leg up. So Tesla ran in 58% in what? 20 days. That's not sustainable. It popped above the three-time standard deviation Keltner channel. Now it's doing a pullback. How far has it pulled back so far? Ultimate puck is it's given back half of its profit. Now again, have a rule for that. I mean, I appreciate buy and hold, folks. At the same time, I am not wired to sit through a 15 or to sit through a 25, 30, 40% loss. I think that I think proper, again, this is an opinion. For me personally, I want to manage my trade so that I never lose more than 15% after I've already had a profit in. So that's what we're looking at on Tesla. Let's throw on a real quick fib, see what, and to answer Yang's question on this also, it probably is approaching. Yeah, it is. I mean, it's up here in the magic fib box, which line, and that's when I draw the fibs up there, Yang and everybody else. They basically, I want to take a look and say, okay, here's where it could turn around. What's missing from the equation yet is that my TSI, my momentum is still to the downside, just started to the downside and slightly to the downside on the weekly, bearish engulfing, and dark cloud followed by a sell-off. And so what we may get on Tesla, there we go. You ask for a level. I like this level across here, approximately halfway in between the 34 and the 50, or maybe all the way down to 50. It may go all the way down to 50 and test it. But in the past, on the past uptrend, it has gone and tested either the 20 and or the 34. So what are we doing? Sell off, sell off, sell off. One of the other things that it could do, and then I'll leave it off at that, is we could find support here, bounce back up. I'll be paying attention. If the rally attempt can't get past the two standard deviation Keltners, I'll look for a potential trade to the downside in Tesla, because heavens, I mean, Tesla moves a day. What's today's range? $55. So you can set up a lot of trades within a $55 range on a daily basis. So I hope that gives you some clarity about what's going on with Tesla, what's going on with Apple's. Again, both of them great stocks, but just position yourself to buy them when they hit the wholesale level that meets your criteria that you've defined. Does that work? Any questions on that really quick? And again, I apologize for running over, but again, I hope that's helped. Yeah, we'll just roll out the rest of this. Okay, cool. So, hey, just, okay. Remember, learn to focus on the process. The profits will follow. They really will. We've done that this year with the, active trend trading and also the top 5. We focus on the process. We basically, follow the rules and so well. And so we're reaping the benefit of all of that. Lastly, the question I have for you guys today is, is Tesla or Apple on your watch list? Yes or no? Yes or no? Okay, cool. And I'm going to change something really quick on this. This is what you call corrections on the fly. Yes. Oops. It's not corrections on the fly. There we go. Yeah, So, hey, and just leave a message in the chat box if it sets up. Well, yeah, awesome, cool. Awesome, loving it. And so remember, if you are joining us on Facebook, on YouTube, please subscribe, hit the bell to be notified of basically new content. You can always reach me at my email address. And I will just put in there one last thing. Hey, if you're looking for a great watch list plus triggers on getting in, look at the Power Rank Elite watch list. Basically, for about $20 a month, you get every week 5 stocks that are setting up, along with how I'm trading it with my triggers, the whole 9 yards. I know the people who've been trading this. Somebody sent me an email and says, "Hey man, this is really helping me. I'm up really strong with the positions that have been coming through." He goes, "But it's really awesome because in 30 minutes I'm done with my prepping out for my trades for the week." So awesome. So if you're not on autopilot, engage your autopilot and join us with active trend traders. So that's all I've got. Again, September, we've already defined it. It's a month of waiting. So if it's a month of waiting, what do? You wait. But what do you do while you're waiting? You prep, you practice, you basically get ready for the, if you will, the second season. That is typically the end of year rally that we want to be able to ride up to additional profits. I would really like to see active trend trading push 75, and maybe I shouldn't say it, 75 to 100% returns for the year. I think, that's my new target for the year. So Steve, thanks for joining, man. Aloha. Trade well, prosper. Have a great Labor Day weekend. Hopefully, wherever you are, you basically have the freedom to go places. And so, hey, remember, hit the subscribe button. And lastly, there'll be a video that appears here a little bit at the end of the current session. So aloha, God bless everybody. Steve, again, thanks a lot. See you guys.